Welcome back to Investing Talk podcast. We're here to give you those quick, vital insights into the markets you need.
And today, we're definitely doing that. We're zoning in on a company that's about to release its financials. We're talking about VNET Group. They're a pretty key player in IT services and, the data center world.
That's right. And we've gathered, all the latest info on their upcoming earnings report. Our goal today is basically to break down what analysts are expecting, what the company's track record looks like, and what you should really be watching for when they report.
Exactly. So whether you need an edge for, say, an upcoming meeting, or you just want to stay ahead of the curve, we think we've got you covered.
Okay, before we really get into the details, if you find these discussions useful, please do remember to subscribe, like, and maybe leave a comment on this one. It really does help us out.
Yeah, it does. And if you want to support us even more, maybe think about buying us a coffee. The link's usually somewhere below.
Oh, and also, if there's a company you want us to look into next time, just drop in the comments. We actually do read those. All right, let's unpack this. VNET Group, their unaudited Q2 2025 results are coming up, really soon.
Yep. The date is set for before market open on August 21st, 2025. And there's a conference call scheduled, too, 8:00 a.m. Eastern Time. Those calls are often where you get the real color.
Right, the call is key. So what are the market watchers, the analysts, actually anticipating for this quarter? What's the baseline?
Okay, so the consensus expectation is for revenue of roughly $2.27 billion for Q2.
$2.27 billion, okay.
And on the earnings per share side, the EPS, the consensus is around 0.001 cents, just a penny.
A penny per share. Is there any kind of whisper number floating around? That unofficial street expectation?
It's interesting you ask that. From the sources we looked at, there isn't really a widely cited whisper number for EPS this time, which could mean anything, really. Maybe less strong conviction either way.
Yeah, it could be. So how does this 0 to 1 expectation compare to what they actually did last quarter in Q1?
Well, in Q1 2025, VNET Group reported revenue of $309.52 million and an EPS of negative 12 cents.
Negative 12 cents? Wow, okay.
Yeah, and it's important to remember the company didn't give explicit management guidance figures for Q2, at least not in the summaries we have.
Oh, okay. So analysts are kind of flying blind, basing it on their own models and maybe industry trends.
Pretty much, yeah. Makes it a bit harder to gauge things.
Definitely. So this is where looking back becomes really interesting. How has VNET Group performed against expectations historically? Any big surprises?
Well, the last 4 quarters show let's say some variability. Q1 2025 was the big one recently. A significant miss. That EPS of negative $1.12 was against a negative -1 consensus. So they missed by 11 cents.
11 cents is quite a miss. What about revenue that quarter? You said $309 million.
Right, $309.52 million. But the expectation was way higher, like $2.22 billion.
Whoa, wait. Billion? That sounds huge.
Yeah, it does. But the source notes suggest this huge revenue miss likely reflects some kind of data mapping issue.
Oh, okay. Like an accounting thing, not necessarily a collapse in business.
Possibly. Is something to bear in mind. But Zacks, for instance, still pointed out that Q1 was a negative earnings surprise of like 133.33% versus its consensus. So the earnings miss was definitely real.
Okay, so a messy Q1. How did the stock react right after those past earnings? Any patterns? Big jumps, big drops?
That's another tricky part. Specific data on the immediate post-earnings price reaction, like the gap up or down or reversals. It just wasn't detailed in the sources we have for the last 4 announcements.
So no clear historical pattern for the stock's immediate reaction?
Nope. We can't really confirm a precise reaction analysis here. Adds a bit more uncertainty, doesn't it?
It really does. Okay, what about broader trends then? Looking beyond just one quarter, what are their key metrics doing?
So their trailing EPS, looking back over the last 12 months, is currently around negative 0.01 cents. Basically break even, maybe a slight loss.
Right.
But here's the potential kicker. Market beat highlights an expectation for growth next year. Like a jump from maybe negative $0.06 to positive 51 cents per share.
51 cents. That's a massive turnaround they're projecting.
It is. It suggests analysts see a path, a trajectory towards real profitability improvement. That's a big part of the story here.
Okay, that profitability angle is crucial. But what about their financial health, the balance sheet? Any red flags there?
Well, looking at Morningstar's data, their current ratio is 1.10. Which means their current assets are just slightly more than their current liabilities. It suggests somewhat tight liquidity.
Okay, not a lot of wiggle room, maybe.
Kind of. And their interest coverage is 2.05. That means they can cover their interest payments. It's serviceable, but maybe not super robust compared to some peers.
So sensitive to financing costs, maybe?
Could be, yeah. Especially since their quick ratio, which excludes inventory and is stricter, is only 0.63. That really underlines the tighter liquidity picture.
Got it. Tight liquidity, potential profitability, turnaround. What about recent news? Anything notable happening with VNET Group last quarter besides earnings prep?
The main thing, honestly, was just the announcement of this upcoming Q2 report. Standard stuff.
Mm.
Although there was a headline reference in MarketBeat's feed about a share repurchase authorization.
Oh, a buyback.
Potentially.
Hmm.
The full details weren't in the excerpt we saw, but, buybacks can signal management confidence or just be a way to return capital. It's something positive potentially lurking in the background.
Definitely something to watch for confirmation on. Now, VNET Group is in tech, specifically IT services and data centers. How do the bigger picture trends, sector stuff, macroeconomics play into this?
Right. They're classified in the technology sector, Information Technology Services subgroup by Morningstar. So yeah, their performance is definitely tied to overall enterprise IT spending.
How much are companies investing in tech?
Exactly. And also demand for cloud services. If businesses pull back on IT spending or if cloud growth slows, VNET would likely feel it. On the other hand, if digital transformation trends stay strong, that's a tailwind for them.
Makes sense. Have analysts been saying much lately? Any new ratings, price target changes?
MarketBeat mentioned a consensus target price of $9.30.
Yep.
That was from American Banking News coverage around August 9th.
9.30, and the stock was around $8 recently.
Yeah, close was $7.98 on the 8th, so that target implies some modest upside according to the consensus view captured there.
But no big upgrades or downgrades making headlines.
Not specifically itemized in our sources, no. Just that overall consensus target.
Okay, let's talk about the stock chart itself. What's the recent price action been like leading up to this report?
Well, like I said, it closed around 7.98 cents on August 8th, ticked up slightly after hours to $8. It suggests pretty muted movement in the week right before the announcement. Kind of quiet.
Quiet before the storm, maybe? Or just waiting for direction?
Could be either. Sometimes the market just holds its breath.
Do the options markets give us any clues? Like, how much of a move are options traders betting on? Implied volatility.
Yeah, that's often a good tell, but unfortunately, the sources we reviewed didn't provide that data. No call put ratios, no open interest details, nothing. Nope. And crucially, no options market implied move percentage or implied volatility figure for the event.
Huh. So we can't even say options traders expect a plus or minus X% move.
Exactly. We don't have that specific number based on options pricing. Another piece of the puzzle missing, really.
Okay, so we're missing some usual signals here. Let's try to piece it together. What are the potential scenarios for this earnings report? What would a good outcome look like? A bullish case.
Okay, a bullish case would definitely start with an EPS beat, getting above that $1.01 consensus, and clear revenue outperformance, too.
Beating the numbers. Got it.
But it's more than that. You'd want to hear positive commentary on things like utilization rates in their data centers, occupancy, maybe cabinet growth. Those are the operational health indicators. Also, any confirmation of faster bookings, lower customer churn, or improving margins would be huge.
And that share buyback.
Yeah, details on that. Or even starting it would absolutely add to the bullish sentiment. And finally, the big one, strong forward guidance. If they guide for accelerating growth and better profits in the second half, lining up with that market beat projection for next year, that would be a major positive catalyst.
Okay, that's the upside. Now, flip side. What spells trouble? What's the bearish scenario, especially with that tighter liquidity we talked about?
Right. A bearish outcome would be another EPS miss, particularly if it's a bad one, or maybe just soft guidance that disappoints expectations.
Lowering the bar for the future.
Exactly. And it would be especially worrying if margins are getting squeezed or if revenue growth slows down unexpectedly. Given that 1.10 current ratio and the low quick ratio, any sign of liquidity getting tighter or maybe higher interest costs really eating into profits, that could hit the stock hard. It raises questions about their financial flexibility.
Makes sense.
Also, just, unclear reporting. If the numbers are confusing or don't line up with consensus without a good explanation, that can really spook investors if management doesn't clarify things well.
So clarity is key, good or bad. If you had to pick one thing, one metric you'll be laser focused on, what is it?
It's tough, but I'd have to say the forward guidance. Specifically for revenue and adjusted EBITDA or margins, that's really the crux of it. Given those expectations for a profitability turnaround, that guidance tells us if the recovery story is on track.
Guidance is king.
Pretty much. And then secondarily, clarity on bookings and utilization of the data centers. That speaks to the core business health.
Okay, so pulling all this together, The numbers, the history, the lack of some signals. What's our overall leaning here? Bullish, bearish, neutral?
I think we have to lean neutral on this one and maybe assign a confidence score of, say, 4 out of 10.
4 out of 10.
Oh,
That's fairly low confidence. Why so cautious?
So it's mainly because while we have the consensus numbers, those past mismatches, like that Q1 issue, make it hard to trust the baseline completely. Plus, the lack of a whisper number, no clear options market signal telling us about expected volatility, and no historical stock reaction pattern to go on. It just adds up to a lot of unknowns.
Too many variables.
Yeah, the whole story really seems to hinge on that forward guidance and the margin picture they paint. Yeah. Until we see that, it feels pretty uncertain.
Understood. So for our listeners trying to navigate this, what are some potential strategy considerations? How might someone approach VNET's earnings?
Okay, well, for more risk-averse listeners, honestly, just staying on the sidelines through the report might be the prudent move.
Wait and see.
Yeah. Given the uncertainties we've talked about, maybe wait for the dust to settle, see the guidance, see how the market reacts, and then reassess. Now, if you're more risk-tolerant, and assuming options are liquid enough, you could consider event-driven strategies. Maybe limited risk call spreads if you're bullish, or put spreads if you're bearish to cap your potential losses.
But carefully, right?
Absolutely. Since we don't have that implied volatility number, you'd want to size positions conservatively. Definitely avoid naked options where your risk is theoretically unlimited. And maybe, post-earnings, if the guidance really confirms that profitability ramp-up we discussed, you could look for momentum entries on confirmation, using tight stops. That might be better than gambling before the news drops.
Some very practical considerations there. This has been a really insightful look at VNET Group. It just shows how much digging is needed before an earnings report, doesn't it? It's way beyond just the headline EPS number.
It really is. It's about understanding the context, the trends, the potential pitfalls, the why behind the numbers. That's where the real understanding comes from.
So here's a question for you, our listener, to think about. Based on our discussion today, what do you think is the single most critical factor for VNET Group in this upcoming report? What are you going to be watching most closely?
Yeah, that's a great question to mull over as you do your own thinking and follow the news from VNET.
Okay, that wraps it up for this session of Investing Talk podcast. We hope you feel a bit more prepared and informed. Remember to subscribe, like, and comment if you found this helpful, and maybe buy us that coffee.
And please do let us know in the comments if there's another company you'd like us to tackle in a future discussion. We appreciate the suggestions.
Until next time, happy investing.